Hi, Dilly.
Hey, George.
How's your
You
day?
went with the traditional
Well, no,
opening
no,
music.
no. I didn't. It wasn't even traditional. I never used that opening. The reason I did that though today was because I'm actually in my car. Um, and actually, it's a good story behind this. So you and I were
Mm-hmm.
talking about car repairs the other day. So check this out. I think I told you. Did I tell you about the rip-off price of the oil change? I can't remember. Did I tell you that
Yes,
story?
yes, yeah.
Okay. Okay. So check this out. So I just find it offensive.
Mm-hmm.
So I know you've moved around the country a little bit, but are you familiar with the chain Pet Boys, Manny, Mo, and Jack?
Yeah, why does that sound
Because
familiar?
it's a chain of auto parts stores, but they also do auto maintenance. And so they actually, you can see I put this ridiculous post up today. I did one of those walk and talk things, which was pretty lame. But anyway, so I go to the Bronx because the Pet Boys place, all right.
Oh, it's in the Bronx?
Yeah, so check this out.
Okay.
Instead of $1,200, they want $200. I'm not making this
Oh,
up.
hell yeah.
It was actually 222 plus tax. Okay, talk
I love
about
it.
rent.
What a
Talk
steal of
about
a
rent.
deal.
Talk about rent seeking exploitative behavior. All right, 222 instead of 1,200. Like, could you
Yeah.
imagine?
What
So
was it
anyway, so
all in was it all in Westchester?
no, this is in that
No, no,
Bronx. You
no.
gotta
I
get
mean like the other places like that you
Oh,
told me about
no, one
yesterday.
of them, no, one of them was actually in Joyzy across the bridge where
Yeah,
I
I was
come
gonna
from.
say, did you go across the bridge? That was like
Yeah,
what I was
no,
gonna ask you
they were all.
yesterday.
I mean, the second place I called was going to give me a deal. He said, "Oh, it's a range of 800 to 1,200." Oh, I feel better now. Okay, so any
Mm-hmm.
of it,
Yeah.
Pep Boys and Manny Mill and Jack 222. So you approve of that, Dilly?
Yes, yes. And for everybody listening, we are now sponsored today by Pet Boys.
actually,
Thankfully,
actually, they
George
put
got a deal on his his oil
Actually,
change.
you know what? I was looking at this thing. They put in Pennzoil, which is like legit oil. It's that synthetic oil. So
Yeah,
like,
yeah, yeah.
I got in a whole discussion. I know too much about synthetic oil now. It's explaining to me why it's so much better than regular oil. But anyway, but I digress. So another day in paradise, another complaint from George, and so there you go.
But a
So I
good
feel,
turn of events.
yeah, no, I feel so great. I saved $1,000 just off
Now
that. It's
you're
just
just gonna have to like drive an hour and a half back home.
Yeah, well, actually, without traffic, it's 24 minutes, and I see Brendan is here, so we
Yeah.
should get Brendan. Maybe Brendan knows a good auto repair place, because, like, you know what happens? They just look at the zip code where you're in, and they figure, oh,
Oh yeah. I
yeah,
live there.
oh yeah.
Mm-hmm.
So you know how it works. So at any rate, all right. Enough about oil changes. So let's get to the matter at hand. We are very thankful to have Jay Mintzmyer, an actual shipping guru, as opposed to the furus. Jay, I've known Jay a number of years. He is the man on shipping. His knowledge is encyclopedic, unsurpassed, and I knew him when he was a nobody, and he's really, really come along a long ways with his Value Investors Edge, VIE, which everyone can find on Seeking Alpha.
Awesome.
Jay also recently got his PhD, I think, from Harvard, and most importantly, and his wife just had twins.
Oh
They had
wow,
twins.
congratulations.
So Jay has a real full time job now. He's trying to
Yes, sir.
beck and call with his twins, and so he was very kind to cut out an hour. I don't know if he couldn't deal with the foods anymore. And Dilly, don't you love it? And,
Can
and
we
Jay,
ask him what he
you
thinks first
know,
about like all the shipping experts on
yeah.
Twitter?
So first, Jay, please unmute yourself. Welcome to Spaces, man. Good to see you.
Hey, George. Hey, thanks for having me on. Audio working? Hear me okay?
Yeah, we
Yeah, you
hear you
sound
great.
great.
All right,
Yes.
fantastic.
So, Jay, do you just like? What's your reaction when you see all the shipping furus? They'll post about container ships with live shots to the port of L.A. or they got their maps with the vessels going this way and that way across the Pacific. Or then
Right.
they want to talk about tankers and they put up a picture of like a bulker or something. It's just like you just want to shake your head.
It's outrageous, but it's nothing new, and it's a really good time to have those twins because I'm not doom scrolling, so I haven't been
Yes,
I haven't
yes.
been as triggered by it. So I've been really quiet on Twitter the last couple of weeks, but yeah,
Yeah, so Jay, not just because bringing life into the world is one of the greatest things you can do, but also because you're not doom scrolling on Twitter. Your mental health must be in such a great place right now.
it's funny. Over the last 10 days, I've made one single trade, and it's kind of nice. I like it. Feels good.
There you
It
go. So
offsets the
how's it?
3 a.m. wake ups and 5 a.m. wake
Yeah,
ups.
how are they doing? Do you and your wife have it down to a rhythm now, or what's
Well,
going on?
they were born 34 weeks, so they were born 5 weeks early. They spent 2 weeks in the NICU, and they came home with us last week. So we've only had them at the home for about a week. But the little troopers are doing really well. But they're babies, and there's
Right.
two of them. So the nights are very sleepless, and we don't have a rhythm yet, George. That'll be a couple
Is
months
this
from now.
your first?
It is the first, and two of them.
Oh,
Yeah,
wow.
yeah,
Yeah, that's a lot.
yeah.
Congratulations.
Yeah.
Thank you so much. So with that said, everybody, just so everyone knows, I'm in Pacific Coast time, but 2 o'clock hard stop for me. I got to get back to some work here.
All right. So let's go for it. So Jay, I'm gonna throw up just go where you want with this question, but not what do you think of the economy and the stock market, but like what's your strongest conviction or what's your biggest variant perception right now as you look around? I mean, anything really strike you, opportunities or things markets pretty well up with events and I'm doing one of these speech and a question things. And as you know, sometimes there's a lot to do and sometimes it's not a lot to do just because markets are, have a reasonable hold on fundamentals. So in terms of like, is there a lot to do now? And like, do you see a lot of things out of whack? And, just what do you observe when you look at the stocks that you follow?
Certainly, and I'll just stay focused on shipping, obviously, because that's my lane. Obviously, everyone has opinions on everything, like you said, you're sarcastically about where you think the market's going, but we'll hold off on that. We'll focus on shipping. Now is a time, and it's interesting because I'm a long only investor, mostly myself, and we run a research platform, Value Investors Edge. We have about 700 members, and of course, we always want to be bullish the market because we have a business and we want people to like shipping because we like it. Now is a time in shipping where it's kind of a analyze the situation, sit on your hands, don't need to be overly actively trading kind of time. Like I'm not going to come on here and tell everyone you need to go out there and buy shipping hand over fist. There are a few themes that I like that we'll get into, and then maybe a couple names within those themes. But this is not the all time low of shipping. It's not like 2020 during COVID where it was like buy hand over fist. It's
Yeah.
also not like when
Yeah,
Russia
yeah,
invaded
Jay.
Ukraine, right? That was a buy tankers hand
Yeah,
over
yeah,
fist.
Jay. I was just gonna say when I remember when the 2020 COVID thing, man, oh man, did you kill it? Because things dropped, and then boy, the next couple of years, you just destroyed it. I mean, it was just oh my god. And so, it's wonderful if we can have those opportunities all the time, but the opportunity set's not linear. So, I mean, you got to you got to take the pitch. Whatever pitch Mr. Market gives you to hit, that's what you got to deal with.
Yeah, absolutely. And the funny thing about 2020 is, 2021 for us, long only models, 133%, no leverage, no options, nothing, which is fun, which is amazing, right? But that was the year of the retail trader, right? Like everybody was a genius. So everyone's like, oh, that's cool. Like my neighbor did a 4x yesterday. So it was actually 22. It was actually 2022 when all the retail people went broke that we actually made a killing,
Right,
right? Because the market went down
right.
20%, the Fed started raising rates, and our shipping names went up 56%. So ironically, the 22 56% return was actually better for us, or more impressive, I guess. People actually were impressed by that. In
Yeah, well,
2021, everybody made money, right?
yeah, and Jay, as you well know, is the market's not the economy, and the economy's not the market. And then on top of it, the other truism, it's a market of stocks. So some sectors are doing well, others are doing poorly. So you can't you generalize at your own risk. So there you go. So having said all that, staying in your no pun intended shipping lane, and everyone and Jay, maybe just briefly explain to every folks how you got a lot of different subgroups within shipping, whether it's bulkers, tankers, LNG, whatever. That might be useful because they have all their own cycles.
Yeah, absolutely, George. And so, folks, obviously, George is aware. He's named many of the subsectors already, but shipping has 7 or 8 different subsectors, and each one of those has their own, supply and demand curve. And so, dry bulk is one. You're talking like iron ore, coal, things like that. Very China dependent. Then you have the tankers, and you have different types of tankers. You have product tankers, which is like gasoline, diesel, jet fuel, and then you have regular crude oil. And so folks can kind of be familiar with that. It's like a floating bathtub, right? But both of those segments have a little bit different fundamentals. And then you have container ships, which I think is what most people think of when they hear shipping, right? The retail goods, Target, Walmart, Amazon, the 20, 40-foot boxes. That's a completely different trade. There's very little correlation between that and oil, for instance. I mean, global economy is really strong. They're both probably green, right? But in terms of like the actual sector impacts, there's a lot of different differentiation there. Then you have gas, LPG, LNG, liquefied natural gas. So a couple themes today. I mean, everyone's tracking, obviously, Iran and the Middle East. And I'm glad it wasn't on here a week ago, George, because I would have already been so dated. I probably would have like shown my ass.
Yeah, hey, Jay,
Yeah.
if I recall correctly, we were supposed to have done this like 2 or 3 weeks ago before we had the
Yeah.
kids, and boy, we lucked out of that one, huh?
Yeah, I was actually in the NICU, and I'm like, you know what? This is a good time to have an excuse to not jump on a space. It's just so
Exactly.
dynamic, and that's what I
Yep.
mean by like, find your quality names, find the themes that you still believe in long term, right? Don't try to outsmart, President Trump or like Bibi Netanyahu or Iran or like that's something that most of us don't have any particular edge on, unless you're trading like inside information or you work in the White House or something, right? Like, so that was more of a sit on your hands and think about your core long term themes. Or at least that's how I handled most of it.
Right. Okay. So with that in mind, Jay, let's get in. Let's dig in a little bit more. Let's keep it high level. And again, this is not financial advice. Jay will throw a couple names out later on, but just sort of like by subsector, by group, because like in you've always made a big. Maybe explain to folks how you look at things: net asset value, the order book, supply versus demand, and then let's just whip through a couple of the bigger sectors so people get a feel.
Yeah, of course. So we're very fundamentally oriented, hence it's the name, Value Investors Edge. And it's funny, it was founded in May of 2015, before we exclusively focused on shipping. Shipping started at 16 and 17. And so that's why it's Value Investors Edge and not like Shipping Investor Edge or something like that. But, I think the name's good and it stuck. But anyways, we're very fundamentally oriented. So you won't see a lot of, short-term trades or things like that. I do trade occasionally because, it's addictive and it gets to all of us, right? No one's perfect. But mostly we're looking at 12-month to 24-month horizons, maybe 36 months. So it's not Buffett, it's not buy and hold forever, but we're also not trading in and out week by week. A couple big themes right now, obviously, Iran. There's not a whole lot more to add to that. We can have some. I'm sure there'll be some guest questions and some things there, and I'll try to share some insights where I can. I do have a background in a PhD in international relations. I've studied sanctions and trade flows and those sorts of things.
Yeah,
But
and
again, I'm not in the White House, right? So like
yeah,
I
and
can't
by the way,
chance that.
Jay, it's easier for me to say this. I think Jay also, if you look at his bio, he's done certain things where it maybe not might not be the brightest thing for him to say a lot of stuff. So please be respectful of that. So keep going, Jay.
Yeah, I appreciate that note, George. Yeah, I do work with the Air Force. I don't, obviously, I would never talk about anything I couldn't talk about, and I don't actually know anything either way. Of course, I would have to say that either way. But no, I don't know anything. But in regards to that, if I did, I wouldn't be anywhere near a Twitter space or anywhere near a brokerage account. But but I do know a lot, academically speaking. But as far as shipping goes, a couple of the themes that I'm into right now, one of them is crude tankers, and it's been a long-term theme. Again, this is not just Iran-centric. It's not something we're just bringing up the last 2 weeks because we saw a fancy chart with ships going in and out. The crude tanker order book, looking at the supply and demand side, the supply side is beautiful. It is the best supply picture that we've seen in modern history, going back 30 years. I've been in the sector for just over 15, and we've never seen an order book that is so small. We're looking at like 7% of the fleet is on order for the next 3 years. At the same time, the fleet is the oldest it has ever been in modern history. Over 20% of the ships are over 20 years old, and 20 to 21 years is usually kind of a cutoff for those kind of ships. The only reason we have that many old ships around is because of the dark fleet. I'm sure most folks have heard about that. Those are the ships carrying the sanctioned Iranian and Russian oil. And there's a big demand for those, as you can imagine, especially with the Ukraine war that tripled the dark fleet demand overnight. And so there's this artificial market that is it's sort of balanced now, but it's artificially balanced because 20% of the fleet is obsolete and no legitimate trader will touch those ships. Meanwhile, the replacement tonnage is only 6 to 7%. So the supply side is excellent. The only thing we need on demand, it's a very low hurdle, right? I cannot predict exactly where demand for oil will be in a year or two. Nobody can, right? But all we need is for the global economy to not do a complete faceplant. If we have a global recession, guys, like tankers aren't going to do too well in the next 2 years. Nothing's going to do well. I mean, the
Right.
S&P 500 is not
So
going to do well,
just
but that's all we
yeah.
need.
So Jay, let me ask you. So 7%. Maybe contextualize that 7% of the fleet, the order book size. Like when it. So a couple questions. A, like from scrapping and whatnot. Like how much of the fleet goes away every year? I know it can depend on what rates are, but on average. So two questions. On average, how much of the fleet is lost through scrapping every year? And then secondly, when it was bad, a few years back in the past, like how big was the order book as a percentage of the fleet at that time?
Yeah, absolutely, George. And I'll pull up some charts as well since we're talking. It's the benefit. I don't have a webcam here, so I can furiously pull up charts here. But
Jay, that's always the advantage of spaces because you can sit there in your t-shirt and just sunning yourself and nobody knows. So it's all good. It's all good.
yeah, and nobody wants to see me looking like that, anyways. But pulling that up, George. Just talking about some of the actual raw numbers for folks. I said 20%. It's actually 19.1%, but close enough. I think I got the chart here. 21% is over 20 years old, and 41% is over 15. And so
Okay.
Exxon, Shell, those kind of companies, they won't touch anything over 15. So you already have 40%
Right.
of the fleet that's on second tier markets, and you got 20% of the fleet that's obsolete. You asked George. You said normally how often are tankers scrapped? Well, it depends on two things. One, it depends on how strong the rates are. Because if the ships are making $100,000 a day, you were talking about Pep Boys. We got here your $1,200 car repair, right? I mean, if you were making $500 each way driving people to and from the airport as an Uber driver, would you pay $1,200 for a car repair? Hell yeah,
Yeah.
hell
Not
yeah.
even quite. Yeah. Yeah. Exactly.
Exactly,
Exactly.
exactly.
Right.
So if the rates are $100,000 a day, these ships can do more than 21. They can probably do maybe 25, right? Um,
Right.
but if the rates are break even and they have to go do a 20-year survey and it's a $5 million repair bill, suddenly they're like, hey, this $15 million hunk of iron, let's just ship it to Bangladesh or
Sure.
Pakistan, right? So that's usually what happens. It's either the 20-year survey, George, or the 22 and a half. Yep.
And Jay, like this is a long cycle business. Like you order a vessel, from Korea, China, whatever. It takes forever to get it. Blah blah blah.
Yep.
So you can have big mismatches. So like when the market was in a really bad way, when there were too many vessels, like how big has the order book gotten in the past? Looking back, as a percentage of the fleet, at its peak, 7% doesn't sound like a very large number.
Yeah, no, absolutely. That's a great question. So going back and looking at the order book, when you go back to the very peak was about 2007, 2008, 2009. Right? That was back when people thought China was going to grow forever. We hadn't had the GFC yet. Shipping companies were getting leverage, 90% leverage from like Korean and Japanese and
90%
90%.
leverage.
Yes, sir, 90%.
Okay.
And
Okay.
now you're lucky to get 60, 65. So yeah, they were getting 90% leverage, and it was buy. And the ships there was like five or six popular stocks on the U.S. exchange. One of them was dry ships. Most people have PTSD about that one. And these stocks were trading on the U.S. stock market at 200 to 300% of net asset value. So it's like the value of the fleet in the market, which by the way, George, was already bloated. Right, the NAV was already bloated. The stocks were
Right.
trading at 200 or 300% that. So there was like
Wow.
bottomless sources of new equity, right? And then the banks
Right.
were giving 90% leverage, so
Right.
everybody could just go out there and buy. So, anyways, George, the order book got up to 60% or higher at that point in time.
60. Wait.
60,
Say that again, Jay. 60?
60. And in fact,
Holy
different
smokes.
segments. Some segments were even worse. If you look at Aframaxes or a specialty segment, they were up closer to 65. If you look at dry bulk, it was up to like 70, 75%. Container ships were up to 100% at one point. So yeah, it was wild.
That's crazy. All
Yeah,
right, so let's go back. Let's stay back with tankers. So you got a healthy situation where there aren't a whole lot of vessels on order, and like you say, if the world doesn't come to an end, we don't have a recession. These things should do. I mean, they should do pretty well.
pretty well, pretty
And
well.
obviously, Jay, explain to folks too how the difference between spot and contracted rates. Because a lot of times, people say. I mean, I know the shipping stocks frequently are traded as a proxy for spot rates,
Mhm.
but maybe explain to folks how you can see the spot rates go all over the place, but that's not necessarily what the companies are earning. And maybe explain a little bit between spot and forward rates. It might be helpful.
Yeah, absolutely, George. Good question there. So of course, spot rates is kind of what you see in the market. So the ship takes a single voyage from point A to point B. There can be a few days of due diligence and vetting, right? Who's the client and is it a non-sanctioned cargo and so on and so forth. But generally, it's just a commodity. Pick up voyage from the Middle East to China, right? And so those are pretty synonymous with the rates that people see quoted when they see headlines and say, hey, the rates out of the AG or Middle East Gulf. You got to be careful. It's not the Arabian Gulf. Is it the Persian Gulf? It's Middle East Gulf. But anyways, the rates out there are $100,000 a day. That's essentially what those companies are earning. But that's one off, and that's only good for 50 days or 60 days, however long the
Right.
round trip takes. And so these rates are quoted in what's called RV, round voyage. So it's like a round trip. So if it takes 30 days, right, to get from the Middle East to China, they quote it based on the round trip. So if they say $100,000 a day, that means the ship made $6 million over 60 days, right? And so
Got it.
that those rates got really high last week because there's a huge war risk premium, but there was kind of a misnomer too, George. I'm sure you know this too, but there's only a dozen ships that got those kind of rates
Yeah.
because
So yeah. So maybe share with people. I know it's not a precise number, but if you had to reckon like the average contracted rate, like the real companies, a lot of the stuff's contracted out. So forget about the 100,000 plus you see on the screen. What's like kind of the normal rate that that companies were paying and receiving, etc.
yeah, and of course it's a difficult question to answer because there's not only in tankers but just in tankers alone there's like 7 different types of tankers, right? But let's go with VLCCs. Those are the 2 million barrel big floating bathtub Empire State Building size ships. A normal rate for those ships, George, like over the course of a year would be maybe like 28, 30, 32,000. So 30, call it
Really?
30,000 a
Wow.
day. That would be
Wow.
like normal. That'd be actually a decent market. And
Right.
so, and the way these work, and I know you know this, George, because you have experience in shipping stocks as well. But the way these work is they have enormous operating leverage to the upside because these companies have huge fixed costs. They have the operating costs to crew the vessel. They have the bunker fuels to move the ship around. They got the maintenance schedule for the ship. They have the crew wages and all that kind of stuff. So these companies have a break even, and they have debt, right? They have to service the debt of the company. So these companies usually have all in break evens of maybe like $20,000 a day, right? And that includes the
Right.
debt service and everything. The operating break even is usually about 10,000. But let's say 20. Keep it simple. So let's say their rate normally, George, is 30,000 a day. That means over the course of the year, the company makes maybe 10,000 in EBITDA, right,
Right.
each day. Well, if
Right.
the rates go up, if the rates double, they go from 30 to 60. You say, oh, that's cool. The rate doubled. Well, now their profit went from 10 to 40. So when the rates double,
Yeah.
the profit goes up 4x. And that's before we
Jay.
talk about financial leverage. Add financial
Yeah.
leverage, it might go up 10 times.
Yeah, Jay. That is a crucial point, and that's what makes your shipping universe so interesting because I can't. It's hard to think of another group or sector where you've got just the extraordinary operating leverage that your shipping companies have, and it creates opportunities, also creates risks. So, okay, so So you were talking about tankers, and the order book looks pretty good. And so if the world doesn't come to an end, like we should be in okay shape. I realize you got to be patient, trying to time these things is difficult, but I presume, Jay, the valuations, the price to NAV on a lot of the major tanker stocks are pretty okay, so you're not too worried about buying them here.
Yeah, well, the interesting thing is, despite the excellent long term picture, the valuations of these tanker companies have come way down over the last year. And I think the main reason for that, you can actually trace it all the way back to right around the Biden Trump debate. That's about the time the tanker valuations peaked. And I don't think
Right.
that's a coincidence. There's other factors. I mean, that's not the only one, but I don't think that's a coincidence because the market's belief for a long time, and I think it's kind of wrong, but the market's belief is that tanker rates are only good because of the sanctions on Russia. And the market believed that President Trump promised on the campaign trail that he was going to end the war on day one, right? I mean, that's not you can't end a war in one day, but that was a campaign promise. And so folks figure, okay, well, the Ukraine Russia war is going to end, and all the sanctions on Russia are going to go away, and tanker rates are going to crater, right?
Right.
And so I think that's the broad market's belief. So if you look at tanker stocks, they're mostly pretty heavily down year over year, even though the earnings have been pretty decent. We did have a
Mm-hmm.
little bit of a gut punch last fall because China had a pretty bumpy fall or fall season rather. They didn't fall, they fall. But anyways, the fall and winter seasons were pretty bumpy, and there's a lot of Iranian oil that was kind of front ran right before President Trump took office. And so all that Iranian oil went all in the dark fleet. So legitimate tankers that we own and invest in didn't benefit from any of those traffics. And
Got it.
because then that oil was front ran because the Iranians and the Chinese were smart enough to realize that things were going to get a little bumpy over there.
Yeah,
And
Jay. Yeah,
yeah,
yeah, Jay. If you look up in the nest, I couldn't resist it. Dilly has better color maps than I do, but I couldn't resist. I took one of the wise guy tweets that I put up the other day from somebody else. It was one of those maps of the Strait of Hormuz. It says about a fifth of the world's oil passes through the strait daily. So
yeah,
yeah,
it's true.
calling all shipping for routes. Okay,
Yeah.
so
Well, the chart's
so
true. It's
so,
a good
so
chart.
yeah, I know. So everyone's afraid that if peace breaks out. the demand for the shipping thing is going to collapse. Is that and by the way, so it's not just the Iran situation, but all Russia things. So maybe just talk about. I mean, and maybe talk about ton miles and length of voyage and all that kind of good stuff. Like, so you think the market's already discounted whatever downturn in rates might occur if peace were to break out globally? It's already kind of discounted in the price of the shipping stocks. If I understand you correctly,
Well, I think
is that what you're saying?
yeah, sort of. I think what the market is missing is they're missing the fact that 20% of the fleet is totally obsolete. So if
Okay,
the fleet was all young, if it was all homogenous, it was all 10 years old in modern tonnage, then I think the market's valuation of these tanker stocks would probably be correct. Because you say,
right.
hey, there's a, I don't know, George, I'm not handicapping the odds, but you say, hey, there's a 50-50 chance of Ukraine Russia peace by, I don't know, the end of this year. And
Sure.
maybe, whatever, right? And you handicap those odds and you say, well, the Houthis have been spanked pretty bad and Iran is done. And apparently Syria is signing a peace treaty with Israel. Who would have seen that coming, right?
Yep.
And
Yep.
so,
Yep.
so that these tankers have benefited from several things. First of all, the sanctions against Russia have created longer distance trade routes. George, you mentioned ton miles, and so
Yep.
it's not the overall demand for oil; it's the route and the length. Because now that Russian oil has to go all the way down to Africa or all the way over to China, it used to just hop, skip, and jump over to Europe, and so now the
Got it.
tankers have to go a lot further. Not only that, but the Houthis have been sitting there firing drones and submergible like torpedo drones and things like that at ships in the Red Sea, which have caused a lot of tankers to reroute, which makes the route even longer because they have to go all the way around Africa.
Right.
Right. So those are the two
Right.
things that have benefited tankers. And you talked about Furus, right? You talked about everyone busting out charts and everyone's a wise guy. And
Yeah.
they're like, well, and people like, I don't know what it is, but people hate shipping. Like this is like every time I meet someone and start talking about shipping, like people just hate it. They're like, oh, it's a terrible business. It's so awful. Like, don't you know? Like, you only made money, Jay, because you got lucky because of COVID, and
Right.
yeah, people hate this stuff. And
Just Jay, you kind of you should adopt a new persona. You're kind of like the Rodney Dangerfield of the stock market. Like, get no respect, shipping gets no respect. So yeah, no, 100%, 100%. So yeah, but so that's a really interesting setup. So Jay, let's quickly just go on a couple other bigger sectors, and then I want to bring the audience into the room. So I don't know where you want to go next. We talked about tankers. I don't know if you want to just briefly mention bulkers or LNG or
um,
LPG, whatever you think is interesting right
yeah,
now.
I want to leave some time for Q&A. So
Yes.
let's just do like maybe 5 or 10 minutes more with us, Max. And so
Yeah.
let's just do
Okay.
one more theme. Let's do
Yep.
something I'm more bullish on, like
Yep.
directionally
Yep.
bullish.
Yep. 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 Okay. What do you
And that
got?
would be LPG, liquefied petroleum gas, like
All right.
propane.
So
Yeah.
yeah, explain to what LPG is. What is it used for?
Yeah, absolutely. So LNG is the more popular one. That's liquefied natural gas, right? U.S. is a massive exporter. LPG is very similar. It's actually easier to transport because it doesn't have to be as cold. Uh, LNG is like negative 200 degrees, and LPG is like negative 80. So it's not quite as extreme. Still very freaking cold, but not quite as extreme. The ships are a little bit cheaper to build. But there's a few companies that we follow in that sector. One of them is a BWLP. They used to be Oslo listed, but now we're lucky they have a U.S. listing. BWLP, that's one of them. Another one is Dorian LPG. The stock symbol is awesome. Kudos to them. It's just LPG. Easy to find, easy to remember. And then the third one is Navigator Holdings, NVGS. And so those are the three stocks before we start talking about why I'm bullish on the environment. First of all, you got to look at the supply and demand side. So looking at the supply side, there are not a lot of new builds for the more specialty ships. There are a decent amount of new builds for the larger ships. The order book is about 20%. So it's not the 7% that we had in tankers. But at the same time, we have a lot of growth, and I'll talk to some of the growth there. So first of all, India is a massive consumer of LPG, and their imports have been growing year over year, and there's no sign they're going to stop. A lot of people in India still cook with wood. In fact, when I started talking about LPG 4 or 5 years ago, when the trend was first starting, people were actually cooking with cow dung in India. It's just crazy.
What?
Yes, they were actually using like dried pellets, dung pellets, right, basically to cook food. Can you just imagine how gross that is?
Oi.
Yes.
Oi.
Yeah. So the Indian government has been subsidizing for a really long time a delivery of basically tanks of propane, like we have on our barbecues, tanks of propane to rural villages, and they're selling them below cost, and they have to import this propane because India doesn't have their own source of it. And the biggest growth of LPG, which is propane, which is also related to NGLs, natural gas liquids, is the United States. I mean, with our shale fields and gas fields and stuff, we're by far the biggest source of exports. And the United States to India is a very, very long, very beautiful trade route. It doesn't get much longer than that. And that's what you want in shipping. You want ton miles, right? And so this is just an amazing trade. But there is a little bit of a bump here, George, and the bump is that China is also a massive buyer of LPG, and China, U.S., we're going through some tough times right now,
Yep.
so that has created a big damper in the sentiment for a lot of these stocks. So I want folks to pull. You don't have to pull it up right now, but just take a note. Put LPG, stock symbol LPG, into your into Google or whatever, so you pull up a 1-year chart, and you can see what I mean
Great.
on this. Or if you can do a 5-year chart, even you can see the dip and trough even better. But you look back a year ago, and Dorian LPG was $42, $43 a share,
And where's
and
it? And where's it now, Jay?
now it's 25, and
And
so significant
yeah.
drop. It's dropped 40% over the past year, and in fact, if you go back even further, back to like the middle of 24, so May of 24, Dorian was $51. So we've dropped more than 50% over the last year, and a
So,
lot of
so,
it,
so
yeah.
yeah, no, go ahead. So, Jay, is there a bear case, or is it just neglect in a small cap stock, and people just there's no interest, no incentive? Like, what? Why is the stock gone down so much, Jay?
Well, there's a couple things. And so number one, I think by far number one is people are concerned about China. China is the biggest buyer of LPG. United States is the biggest growing exporter. That's a nice, good trade route there. And folks are thinking, well, if this trade war goes really south, China is going to retaliate by stopping their purchases of LPG from the United States. I don't think that's credible, because why would you stab yourself? Why would you shoot yourself in the foot? It's a commodity. Like, why would you not just buy it where it's cheapest? And the United States is the producer. So if you stop buying from the US, you just don't have it. So I don't think that's credible, but I think that's what the market believes. So that's number one. Number two, George, one of the big bull cases, and this was sort of like pie in the sky bull case. Like, I didn't really buy into it myself, but one of the bull cases for these LPG ships is that they can also carry ammonia. Ammonia is like the big, potential alternative fuel for ships. They want to get away, right? The whole carbon emissions, the greenhouse gas. It's almost funny now, because like nobody seems to really care about it much now. But like 2 years ago, remember the ESG and climate change was like,
Sure,
that was like
sure.
everybody, that was like everyone's number one focus, right? And now we're all focused on like trade wars and Iran, and like, yeah, everyone's like forgot about the planet, like,
Oh,
yeah,
all right. So Jay, in the interest of time, let's not go down the ESG rabbit hole right now.
yeah, yeah,
Someone wants to bring the question up, we will, but that's really helpful.
yeah.
So let's bring some of the other folks in the audience. I first want to go to Mark, and then we're going to go to Gnostic. Mark, welcome. Please unmute yourself. You have a question or comment for Jay? Mark? I don't know where Mark is. Okay. Mark, maybe you're muted. I don't know if you realize that, but all right. Well, maybe he'll wake up. Gnostic, my friend, are you there?
Oh, I'm here. Yes,
All
and thank
right.
goodness I got here. I heard your calling coming up. So,
Excellent, excellent. So, yeah, have at it, Gnostic. The floor is yours. I mean, what's so cool about what Jay does, I mean, aside from the fact it's embarrassing actually how well his picks have done. I think it's 40+% over the last number of years. What's really cool is the sectors he follows really gives him a pulse so much of what's going on, globally, geographically, by industry, et cetera, et cetera. So you want juice, you want volatility. I mean, Jay's your man in terms of the sectors he follows. So Gnostic, have at it. What's on your mind?
okay, first of all, Jay, could you follow me so I can DM you? Thank you. Second, when you're talking about China, I have a whole set of issues in there about why people would be nervous about China. I've been following China for some time. I followed electricity in China, and then eventually backed that up into several coal mines out of Mongolia. Coal was selling for $320 a ton at that point, thermal coal, and the companies were doing fine, paying nice dividend, everything else. Uh, I was getting a nice 20% dividend out of that company. And then unfortunately, I opened my mouth in spaces like this, and now it's a 5% dividend because the stock went up. Wasn't much fun. But now coal is 120 to 130 a ton, thermal coal. And the demand for it is not picking up, although the demand is stable. The demand isn't picking up, and the price isn't going back up again. And it looks to me like the number of coal thermal plants being put together in China, when they start saying we're doing 20 a month, something is not right with that number. Now, piled into that, you look at the rest of the whole thing. So, how integrated is the oil product that you were talking about, which skips my mind at the moment? I'm terribly sorry. Into the Chinese economy, and would that be compensating for the lack of purchases of coal? Would that have increased, decreased? Um,
Yeah,
China,
it's
as we see it, is really in a big stew right now, and a real problem. And so, energy consumption of any sort is questionable. And what you're implying from what you're saying is that even with sanctions or anything else, China's demand is still there and substantial.
Yeah. No, excellent question, and I appreciate the lead in with coal as well. You know much more about the coal markets in particular than I do. I've had my own misadventures in coal, uh, but in terms of that market, we look at dry bulk a little bit more, and we have seen that China has artificially. It's weird because, as you mentioned correctly, the Chinese energy consumption is a little bit lower. Their coal growth or demand growth is not really there, but at the same time, the dry bulk market has been strong. And so what we're seeing is they've been stockpiling and building up their inventories. And we're not sure if that's, some might say, the more cynical folks might say they're building up inventories in case things go really south to the United States. They're building up inventories in case things heat up with Taiwan, or maybe they're just taking advantage of low prices. I'm not sure on that one. But to your pointed question on LPG, liquefied petroleum gas or propane, how that ties in with coal, it's related in the sense that if the Chinese economy face plants, right, we're going to see decreasing on both sides. However, LPG is very targeted. It's used for cooking, right? So think about like our gas ranges that we use in the United States. It's used for transportation. So think about city buses, right? There's a lot of LPG buses in the United States as well. It's used for heating. It's used for certain types of factories, but it's not used really for power generation very much. I mean, it could power a generator, right? Like maybe it's a backup generator outside a plant, or maybe it's generators for a hospital or something. But it's not directly related like coal is in that sense. But you are correct that if you are a huge bear on the Chinese economy, and you think that the recession that everyone's been calling for 10 years is indeed going to happen next year, then I wouldn't be too bullish on LPG imports into China. That said, I think the stock kind of already prices that in. I don't actually have a long position in LPG, but the one I like is Navigator in VGS, and that story is even more complex. George and I didn't really get into the nuts and bolts of that one, but Nasik, I think that's a great question, and I think you correctly kind of bring up the bear risk there.
All right. So, Jay, do you want to touch on maybe we'll see if others will come up with questions? But I was curious. Talk a little bit about bulk and a little bit about containers. As you said, everyone thinks about container shipping when you mention shipping, and it's more related to consumer demand, and bulk's more commodities. So just a sort of high level, quick drive by on those two sectors.
Sure thing. So containers, pretty quick, pretty easy. They are massively oversupplied. They had an order book that got all the way up to about 40% a couple of years ago. Even now, I would argue the fleet is already a little bit oversupplied as of today, and yet still the order book is over 20%. And every week, it seems like there's another headline about container liner companies like Maersk, CMA CGM, MSC. They're ordering more new builds. So I'm not long term bullish on the container freight market. However, there is a stock out there called ZIM, which has been fun to trade. It's been interesting. It was a massive moneymaker, really a life changing stock for me off the IPO back in 2021. And I mean that like life changing stock for me. So kudos to Zim. But right now it's more of I hate to use the word like trading sardine, or there's that cliche people say date the stock, don't marry it. But that's kind of where Zim's at right now. I have a small long position, but it's just a trade. And in fact, I'm a lot less bullish on it today than I was like maybe a week ago, because they benefit. Zim, it benefits tremendously from like the Red Sea disruptions, and it's counterintuitive because it's like an Israeli company, but they like massively benefit from like unrest and war in the Middle East. So it's a really interesting trading stock there. I do like some of the container lessors, which are container companies that own the ships, but they don't do the actual freight. So they're not like UPS and FedEx. They don't deliver packages from point A to point B. They basically own the trucks, right? They're just a leasing. They're like a financial play, really more than a shipping company. And so some of those are really attractive, but I don't think we really have time to get into those today. But I do like them. Folks that follow me probably kind of can think of some of the stocks I'm thinking of there. Shipped into bulk, George. Bulk is so China dependent that it's really hard for me to sit up here and make a macro bull case to people. I'm not going to BS people, right? I've been in the sector 15 years, Value Investors Edge for 10. I do own two different dry bulk companies. I'm personally bullish on those two companies, but I'm not going to sit here and make a bullish macro case. It's difficult to do that with China where it's at.
Makes sense, Jay.
Yep.
Jay, how about it's quickly again? Please, if anyone's got a question or comment, please raise your hand. Jay's your guy. If you're shipping furu and if you want to know something, just ask Jay. Jay, what about LNG? Because LNG is great secular long-term bull case, blah blah blah. But a lot of people probably knew it. So the companies, and so there was a big expansion of the fleet. So how does LNG sort out as an investment case for you right now?
Yeah, the fleet is really oversupplied right now, George. There's a obvious clear bull case that you mentioned. So a lot of companies went out there and expanded their fleets. They got good financing on it. The smart companies, the ones that are really well ran, I'll give a shout out to Flex LNG. FLNG is a stock symbol. I don't personally have a position. It's just a name we follow. They did a fantastic job. They fixed almost their entire fleet on long-term charters. And so right now they are benefiting from those charters. And I'll let you pull it up right now so I don't make up a dividend yield. But they trade, I believe it's like 14% yield right now for their dividend. And so that's a very interesting play. But the actual spot rates, George, and the actual current markets in LNG are not attractive at all. So I'm not really here to sell any bull cases in LNG.
Right. And Jay, maybe just a more general question. So usually, especially for individual investors, hear something like 14% yield or 4 PE or whatever. Okay, explain to folks. I mean, and so shipping is not like other sectors, and because of the extreme volatility, earnings could be here today, gone tomorrow, et cetera, et cetera. So maybe explain a little bit more your methodology. It's like explain how PEs can be misleading, dividend yields can be misleading, but the alternative is you always keep your eye on the net asset value.
Yeah, so net asset value is a ratio like anything else. So it's not the end all be all by any means. But what it does show you is it shows you what the overall global industrial market believes these ships are worth. And certain types of ships, particularly dry bulk and tankers, those two types of ships are very liquid. So every year there's 100 or more sales and purchase transactions of one company selling a ship to another company. So these aren't just like hypothetical or theoretical quotes. They're also not steel value. Some people are like, oh, NAV is just steel value. No, it's not. It's not the demolition value. It's actually the secondhand transaction. It's kind of like a used car market, right? And so the good thing about NAV is it tells you what the global market, all the governments, all the companies, all the private ship owners, what they believe these ships are worth. And so you can compare that over time, the NAV, to the stock price, right? And you can, if you have the right sources, like you subscribe to the right databases, like we work with
Sure.
Vessels Value, you can model this quite effectively, right? You've seen our work, George. You've seen how we do that.
Yep.
And when you have those discounts, it's a dislocation between what the global shipping market, all the experts, all the actual people are betting on, and what the equity market, which is a lot of retail traders, let's be honest, what they believe. It's kind of like oil companies. You can look at the oil futures curve, and then you can look at oil companies and see what they're priced at, right? It's very similar. And so that's why we like NAV. NAV can be risky, right? Because in a bull market, NAV is going to be really high, right? And in a bear market, it's going to be artificially depressed. So like, it's not an end all be
Right.
all. It's just a ratio like anything else. But what it tells you
Sure.
is the dislocation between what the professionals, what the actual market believes, and what the stock market believes.
Makes sense. All right, so let's bring in a couple of other. I see we have a couple of other folks up here. So we have Tony Scove. Please, you have a question for Jay? Tony?
Hi. Yeah, thanks for this conversation. It's a great conversation. I invest in shipping and always I follow the speaker on Twitter. What? How do you see the product tanker market going forward and compared to crude tankers? Looking at the rest of this year and into next year.
Yeah, thanks, Tony. Appreciate the question. I like the background as well. Good shelf of books there. Impressive. Anyways, product tanker markets, they are very dependent. I'll be honest, they're very dependent right now, very supported by the Russian sanctions, as well as the closure of the Red Sea. And so if you see, if you believe that those Russian sanctions are going to go away in the next few months, I'm not saying I believe that, but if that's your belief, or if you're concerned about that, or if you believe the Houthis are utterly defeated and the Red Sea is going to be back to business in the next few weeks, then product tanker rates are probably going to be a little bit difficult over the next weeks to months to maybe a year. Now, after that year or so, if the Russian sanctions truly are gone, and if Iran really does come forward with some sort of truce or agreement or peace deal, whatever you want to call it, and we start eliminating the need for the dark fleet, once these dark fleet ships are no longer needed, they're going to be scrapped, because Russia is not going to pay extra money to some sketchy vessel and risk a global oil catastrophe if they don't need to, and neither is Iran. The only reason they're doing that is that's the only way to get their cargoes to the market. And so if those sanctions go away, it's going to take time. It's not going to be overnight. But 6 to 12 months to 18 months later, we're going to see a massive demolition of all those old ships. And at that point, the market comes back into balance, or maybe even turns bullish again. So product tankers could be a little bumpy, Tony, if you're a peace trader, if you believe in that. If the sanctions stay on, or if Putin keeps overplaying his hand, it seems like he's been overplaying his hand pretty hard against President Trump. If he keeps doing that and the sanctions stay in place, or the sanctions go up, then I think product tankers are a good place to be. But Tony, I think the crude side is a little bit more of a clear-cut bull story in my case. So tankers correlate, right? Over time, they're going in the same direction. They're going to go up or they're going to go down relatively together over time. But if it's just 3 months, 6 months, 9 months, I certainly favor the crude tanker market over products.
Yeah, say that. There are companies that pay a very nice dividend, and so if I have some belief that at some point in the next 2 to even 5 years, they're going to give me a nice return, I'm happy to just collect the dividend and wait. That's one of the things I really like about shipping and some of the other companies you mentioned. I've invested some in Flex LNG, and I'm now in Hafnia for that reason, and some others. It's one of the reasons I like the shipping sector is you can find companies with very shareholder focused management that will let you participate in the profits while you wait.
Yeah, that's a great point, Tony. I'm glad you brought that up, because one point I neglected to make earlier on the podcast, or the space here, is that management teams are very important, especially when we're in sort of this sideways market. When we're in a sideways market, the management preferences for shareholder returns make a huge difference. And you mentioned Hafnia. That's a really good one, Tony. Another management team that I want to give a shout out to, I'm not long the company. I don't have to be, right? I just believe it's a good management team, is TORM, TRMD, solid management team. And then one final tanker company, which I believe has a good management team, and I am long the company, and it is one of my top picks in tankers, is International Seaways, INSW. And the reason I like International Seaways, and for Tony and for all the rest of the listeners, is you get crude and you get product. You get kind of all the tankers. It's kind of like a just bet on tankers play. And so you get a lot of the VLCCs, which we're very bullish on. You get some Suezmaxes, and then you also get a little bit of the products. So International Seaways, INSW, probably my favorite tanker play at the moment, at least in public, right? When I speak in public, I try to give broad, very liquid names, very good management teams. I'm not going to throw out thinly traded or sort of sketchy companies, especially in public, right? So that makes sense.
Oh,
So International Seaways.
Jay, you're never gonna make it on Twitter, dude. Get respect, bro.
Oh man, stop
Yeah, all right.
now.
So, quit while you're back. So, by the way, Jay's got like 10 more minutes, but I do want to give a plug again for Value Investor's Edge. Anything and everything, and probably far more than you ever wanted to know about shipping. I mean, he's got models up the wazoo and industry stuff. And Jay, I say this affectionately, some of the stuff is useful. I mean, you're a shipping nerd, you live for this stuff, right? But some of that stuff goes so deep, such a deep dive. It's like, if you're having trouble falling asleep at night, I highly recommend it. But
Oh
no,
geez.
no, but the picks have been great. So, it's, at the end of the day, Jay, you know how it is. It's like, what have you done for me lately? So everyone should have a look, and I think you're on Seeking Alpha, so that's terrific. And the other thing too, just a little shameless plug for Jay. I announced the other day we're doing a virtual stock pickers conference on July 30. This is going to be much different from the last one, which was more macro oriented. We've got so far a roster of 14 different folks, many of whom you know. Jay has agreed to participate, and so all different sectors, long, short, whatever. So it's really going to be interesting to have just outstanding thought leaders in the various areas like Jay. So there's going to be 14 different speakers. We're still adding some more, but it'll be July 30th. The website will be up soon, so just save the date. So anyone else has a question, please raise your hand because we are Jay. As I said, Jay's got to leave. Got a hard stop after an hour. So Jay, let me ask you. This is not a. I don't mean this as there's not an investment collusion here behind this question, nor do I mean it get into politics. I mean, we talk about politics sometimes, but only insofar as what we should what should we do in response to what we think is going to happen, not whether we like or don't like what's going to happen. So one thing I wanted to throw out there, I'm going to ask a loaded question because you and I both know the answer to this, but I think it'd be useful for everyone in the room. The idea that somehow we're going to bring shipbuilding back to this country, all right? This whole onshoring thing generally has been, I think a bit of a reach, but particularly with shipbuilding, and maybe you could just speak to the competitiveness, the cost differences between, be it China, Korea, India, Pakistan, Japan, whatever, the US. Like, I mean, isn't building ships in this country kind of a pipe dream? It just doesn't make any sense.
Yeah, I mean, I want to give laudable sentiment to the idea that we're going to have big beautiful ships built in the United States. I think it's a cool idea, right? Just like unicorns are cool ideas. But if you look at the cost of building a vessel, let's just go with MR tanker, like a medium range product tanker. The Navy has some of these. They call them oilers. The ships that go with the carrier fleet and provide, the oil, the fuel for the ships and the planes and all that. So, anyways, if you build one of these ships in Korea or Japan or something like that, you're going to spend around 55, 60 million right now, and that's actually a pretty high price. It used to be a lot cheaper, but 55 million or something to build a ship like that. If you build it in the United States, and it's going to take you about 2 years to get it, because the order book is a little backed up, maybe 2.5 years to get it. If you tried to build a ship like that in the United States right now, instead of costing 50 to 60 million, depending on the specs, you would be paying over 200 million. So, yes,
Wait. Jay, hold on. I would have thought, stupid me, that largest part of the cost might be raw materials and not labor. So how do you go from 55, 60 million in those foreign places to over 200 million for the same thing built here? How does that happen?
Yeah, well, it's a good question, George. There's several factors. So one is the sourcing of the steel. You got to use U.S. steel, right? You can't use imported steel, so that drives up the price of everything. It's funny whenever we have like a big infrastructure bill, right? And again, politics, right? I'm just speaking as like a financial disconnected, analyst guy. But whenever you have a big infrastructure bill, they say, "Oh, it's going to use American steel," and you're like, "Oh man, that just made the price of every bridge and tunnel and whatever we built doubled." It means we only get half of all the infrastructure because we're using American steel. And, oh, cool. Cool for the steel workers, right? But that's just me speaking as an analyst. If I lived in Pennsylvania, I'd be all for it, right? Anyways, so a lot of that is the price of the raw materials are almost double, 50% at least. And then if you start thinking about tariffs and things, then the labor. First of all, it's not even just the fact that labor is way more expensive, which it is, but there's a shortage of the labor, and it's a supply and demand factor. I mean, we only have 2 or 3 tiny shipyards in the United States that are even capable of building a ship like this, and which is sad, George, because these are not high spec vessels. Korea and China and Japan together have hundreds of yards that can build a ship like this. The United States has like 3. So when you're only building 2 or 3 ships a year in the United States, and those 2 or 3 ships you're building are what are called Jones Act ships, heavily protected, artificial market. They're used to, frankly, being able to get away with extortion level prices. And so that's where the price differential comes from, George. So if we ramp up the scale, if we spend billions of dollars building new, shipyards and things like that, if we train more people, if we go out and convince a bunch of high school seniors that their future should be building ships, then maybe there's a world where we can get that $200 million price tag down to like, I don't know, 120, right? But now we're paying 120 instead of paying 60. And what is it? And the thing is, George, and again, this is veering a little bit into politics, but I say this as someone who is in the Air Force, wants nothing better than the United States to dominate the world, all that kind of stuff. Well, not dominate, but you know what I mean, like dominate the economic landscape and all that stuff. As patriotic as I can possibly be, but let's invest our money in things that make more sense. Let's invest our money in things that actually can work, because building ships in the United States, it's just not economically fruitful whatsoever, and it doesn't matter. If we go into a conflict environment, let's say we go into a conflict with China, does it matter where the ship is built? No, it matters who controls the ship, who owns the ship, who has the flag on the ship. It doesn't
Right.
matter where it was built. So I think we're going about this from the wrong angle. If we want to
Makes
increase
sense.
U.S. dominance in shipping, we need to acquire control and management and ownership of ships, not build them. If that makes sense.
Makes sense. All right. Last 5 minutes, Jay. It's like we get the 2 minute warning of football. I'm giving you the 5 minute warning. Um, let's go to Jan Obel. Jan, please unmute yourself. You have a question or comment for Jay?
Yeah, hi Jay, it's Jan from Denmark. I was curious to know what your view is on the car ferries. The company is transporting primarily listed in Oslo, but what's your view at the current market?
Jan, thanks for joining in here, man. I hate to go out with a negative question. You're not going to like the answer, Jan. But look, Höegh LNG or Höegh Auto Liners rather, Hado, as you know, HAOTO on the Oslo
Yeah,
market, and Huawei, Willingness Wilhelmsen. They were fantastic names for us a couple of years ago. Jan, I'll be honest with you, man. I don't like them at this point with all the tariffs, with all the
fair
tensions.
enough.
I just don't like them. I hate to be so short on that one.
Oh, I like a straight answer. Thank you.
Appreciate that. Hey, Jay, this is a complete non sequitur. It's kind of like maybe a stupid question, but I'm going to ask you anyway. Do you have any reaction to or variant perception or inside baseball observation on the crazy accident we had a year or two ago with the vessel slammed into the bridge in Chesapeake Bay and that whole mess? Like, I mean, that was just crazy.
Yeah, no, that was crazy, George. And there's been a lot of little crazy things that happened. There was a tanker collision that just happened off the Strait of Hormuz with the Front Eagle. It's a modern ship owned by Frontline, publicly traded company. It just happened 3 days ago, or 7 days ago, rather. Sorry, the baby leave is getting to me. Lack of sleep. But just happened about a week ago. That was also very strange. I think folks could really benefit from following Sal Mercogliano. He's got a YouTube channel, What's Going On with Shipping. And he actually talks about that stuff in particular. He talks about the bridge incident, and then he talks about a little bit of speculation about what happened over there last week with the tanker collision. I can't really add much more than that, George. I'll be honest. It's a little bit outside my lane with that.
Hey, Jay, I've never heard of that fellow. Maybe before you go back to your kids or just note to self, maybe just tweet out that guy's YouTube page because I think everyone would benefit from something like that. That'd be a great resource for other folks in the room.
Absolutely.
Yeah, okay. So Jay, we're coming up on the hour. I said we keep you to an hour. I know you got more important things to do than hang out with us, DGens. Any closing comments? Because this has been really helpful, and it's so much to cover in a short period of time. We're gonna carry on here for a few more minutes, but Jay, I wanted you to thank you for coming out, and I don't know if there's any last parting words or shots you want to make. But again, value investors edge on seeking alpha. Everyone, take a look. I highly recommend it. So Jay, thank you so much, and think we could do this again before the year's over?
Yeah, no, I think so, George. Thanks for having me on, and thanks for respecting the 1 hour. I had to beg, borrow, and plead for that 1 hour.
Yeah.
Christina's over there at the Twins. It is VIE Research, the easiest way to get there, VIEresearch.com. We'll take you straight to the landing page. You guys can check it out. We have 1 month trials available so folks can figure out what's on our platform, see if it's a good fit for you. If not, no problem. Like George said, some of the stuff is a little bit deep in the weeds, but our selling point is our long-only model portfolios. And George, you said 40%. I'll be honest, it's 39% annualized return. 39% annualized return over the last decade.
I lied. I lied.
39%.
I lied. I lied.
39%. Thanks again, everybody. It's been great
Hey,
being here.
Thanks so much.
thank you, Jay Dilly. We're gonna hang here. Jay is dismissed. Wow, what a powerhouse, huh?
Yeah, that
Um,
was great.
yeah, I
He knows
mean,
his stuff.
so he knows the stuff, and for those of us in the room that have ever, been involved in shipping, I mean, you want juice, you want beta, you want to make things that'll move if you're going to be investing, and shipping is the place. The only negative, not the only negative, one of the negatives of shipping, because the market caps are so small. You're lucky if you find one that's 5 billion. A lot of institutions will not traffic in these names, so it really is the purview of the individual investor, which, if you're doing your homework, can be a real advantage because they're relatively inefficiently priced. But they're also at times are not that liquid, and so sentiment turns on you, you can get run over pretty easy. So, yeah. So if you want, sharp instruments to play with, shipping is definitely the sector to traffic in. So, no, I thought that was great. I thought, and Jay's the real deal. I mean, I've known him for, oh my God, I don't know, 6, 7 years. And, Yeah, he's a real shipping nerd. So it's he knows his stuff. All right, let's hang here. Dilly, let's do this for another 20 minutes or so. So I want to go to Van and then Brendan. Hey, Van, are you slumped over your drink? What's going on, Van?
Uh, I just missed one question for your guest. I guess I was a little bit late. I was just curious if the Jones Act was protecting national security or just keeping my rum shipments slow and overpriced. I was going to ask for my liquidity.
Oh man, we'll have to get Jay back. I'm not gonna try and BS you on that one. I have no idea. Van, you sound a little more lively or energetic than you did yesterday. You got some good sleep in finally.
I did, but I'm having some technical issues. I'm sorry. I'll have to come back.
All right, whatever. We're gonna go for another 15 minutes. Hey, Brendan, you got a good car replaced for me?
Only if you want to get jacked up because they see your zip code.
Yeah, did you hear the start of the program where I was going
I
off
heard
on the
that
car?
part.
So I'm actually, and it's funny because one of the guys who comes into this room, he tweeted back. And by the way, I don't know if you guys saw it, but I walked into a wing stop and kind of ranked on it. But one of the guys that came in the room, he tweeted back at me. He's like, "Oh, you're on Westchester Ave near East Tremont or whatever it was. So you probably know where I am. It's
I do have one for you though. I'll DM you a couple.
yeah,
I think
no, yeah, but yeah, Brandon. Plus, we gotta do lunch. We didn't. I got busy, but we're definitely gonna get
yeah,
together the next
we're
couple
about
of weeks.
like
All right,
12 minutes from each other.
all right, so Brandon, what do you got for us? What do you got for us?
Did I just hear 39% annualized returns for a decade? That was my question.
Yeah, so let me put it this way.
Kudos.
Yes, the answer is yes, but it's all over the place. He's had some. He's never had a really. I think he's maybe had one bad year, but he's always up. And no, it's true. He's had some years where, it's not linear. I mean, one year he's up 100, next year he's up 10, whatever, blah, blah, blah. But no, it's true. He's one thing I say about Jay, I mean, look, he's not perfect. Nobody's perfect. Straight shooter, military guy, as honest as days long. So no, it's correct. I'd urge, shit, Brendan, now that you're asking me, I probably should ask him for a promo code so I could get a cut of your subscription, but whatever. But no, he's the real deal. He's had more than his share of outsized winners.
No, yeah, I'm just anytime 39% annualized anything. And like most people should know, you would never just have your whole portfolio, right? Like likely in shipping. So like to say that like, oh yeah, it would have been up 39% annualized over 10 years, like
Yep,
personally, that's not going to be the case, right? But if you were to consider yourself like the allocation you have to
sure.
something of that sector, like annualizing 39%, yeah, that's going to be
Yeah,
a
and
top performer for you.
I know Jay pretty well, and I don't know what he doesn't tell me his personal trades, but I suspect that probably mirrors how he's done personally. Just because the other part of that, Brendan, is yes, it's true. You wouldn't put
Right, he
39.
has personal
Yeah,
edge,
but
so he right.
yeah, it's his set. It's invest in what you know, right? That's what he knows. So yeah.
Right, his personal investments are probably way more heavily weighted than the average person towards that
Oh
sector.
yeah.
So he
Oh yeah.
personally, yes, but like
Oh yeah,
even if like
and by the way, he'll freely admit because he and I have traded notes over these. I know him pretty well. It's like so, Brendan. You think I'm the only guy who lost money shorting Tesla? Like, come on. I mean, he's it's value investor's edge. So
I got
he's got
both
some.
hands up.
Yeah, exactly. So it's no, he's a good guy. He's a really good guy, and he's real. And I think that's probably one of the most important things.
Oh no, yeah, I wasn't
So
questioning that. I was more just saying
yeah,
like kudos, because like I think about it often like if I'm to allocate portions like to a manager or to someone I believe like to an institutional manager for that sector or for that like return I'm looking for. It could be like extraordinarily riskier than I could take, or it could be like a certain sector. It could be a certain factor, right? Some sort of diversity that I'm maybe not the like as adept as someone else to achieve like in
hmm
terms of shipping, right? Or like that more secure, more income producing, or the asset that's not necessarily based on top line growth for me, right? Like
right.
I would be extremely impressed, satisfied, and more than happy if that manager was returning me an annualized 39% on like
Yeah.
shipping and sector. You know, that
Yeah,
was the
yeah,
point
yeah,
I was
yeah, yeah,
making.
yeah,
That's
yeah, yeah,
incredible
yeah,
for
yeah,
that.
no, yeah, yeah, Brendan. Like you're a pro. I mean, you get this. I mean, imagine he's working at a sleeve at a multi, a multi strap place, so platform, and
Yeah, yeah.
yeah, and his I mean, shipping's probably got. Let's just, I'm going to bullshit you. Okay, not that I ever would, but let's say shipping's gone up 5 or 10% a year for the last 8 years, and he's up 39. I mean, that's the appropriate way of looking at his alpha generation. So.
Absolutely, yeah.
Yeah. And so so again, everyone should give him a look. And he's going to be, I'm sorry, like, listen, all right, I get it. Like, I'll be very blunt. Okay. So, like, the conference, I'm just going to talk here for a second. And if anyone wants to make a suggestion about the conference, please raise your hand. So, the conference we did June 5 was just off the charts good. I mean, whether it's Michael Howell, Jordy Visser, Ian Harnett, Louis Gobb,
I,
just go down the list. I
I
mean, it
got I
doesn't
got
get,
one. I got one, George.
yeah,
Breakout
go ahead.
rooms.
Yeah, yeah, go ahead. Go ahead. Yep. Yep.
Breakout rooms. Let people break out into like if like whatever they're most interested in or the speaker they are with like 10 people in it and like you can ask questions, have your own little like piece of like, 20-minute time, more intimate time. Let people get like it's not one on one, so the person doesn't have to be alone, but it's like, from a bigger conference, right? And then you start to drill down and you're like, all right, well, I'd love like that 20-minute like deep dive on this with like the other 10 people that are interested in, right? And
Well,
it's
how?
almost
Yeah,
like
yeah,
breakout.
Brendan, I hear you. How long would the breakout room have to go for, though?
10 minutes a pop, right? Like on a specific topic. You know what I mean? Whoever wants to join each does. And you have like maybe 5 or 10 of them, right? You do 5 of them for 10 minutes in an hour, cover an hour span.
So maybe sure I understand you. So let's say Jay is coming. Okay. So let's say Jay talks for 10 minutes. He pitches an idea. Okay. So how long? So if we have a breakout room, how long is his breakout room going to last?
I'm saying each speaker after it has like a breakout room. So those that want to like continue a more intimate conversation can and about those things as other speakers may want to continue. So like have all the speakers, right? And then periodically you can have breakout rooms or afterwards have like sessions that way. That way you can be like, all right,
Okay.
yeah, I love
All
this
right.
one, I love
Okay.
that one, but I
Okay.
would have loved 10 minutes to chat with this guy now.
Okay, so all right, so Brad, it's a great idea. I've got about like it's a great idea. I'm going to take it under advisement. I'm just I'm wondering about the technology limitations of doing something like that. So you and I should talk
Zoom
offline.
like creates breakout rooms. That's kind of where my mind went with that.
I'm sorry. What did you say, Brendan?
Like Zoom, like
Yep.
webinar, has the
Yep.
ability for breakout rooms
Yeah,
specifically.
okay. So we're using Zoom. The other thing I was thinking, also given that it's 5 weeks away, I don't know, we got to figure this out. But the solution is second best because I'm hopeful if enough of you guys turn up for the stock picking idea. I mean, this is stock ideas. This is not macro blah blah blah. All right. So each guy's going to come up with one or two ideas. So if we had 15 speakers, you're going to come away with 20, 25 ideas, and the quality of the speakers is guys like Jay Mintzmyer. In fact, you know what? Right here, right now, I'll read to you because not everyone had a Twitter handle. All right, I will read to you who's going to be there. All right, and here's the frustration I have, which is like I don't know where else you can ever get something like this in terms of quality. And a retail person might think, well, $300 for a
I
conference. So
think the difference is this. We feel the gap or separation of spaces. I might get the opportunity to ask the guy a question, whereas this is like I'm being lectured to, and I don't feel that way because you and I both know how we should feel lucky too, so, right? To hear their takes, to listen to people. It is
right. Okay.
unique
Okay.
and it
So
is,
okay.
but that
Brent,
yeah,
so let me just read this to you. Okay. We got Jay Mintzmyer, Motorhead, who I hope he's not going to talk about Tesla. I may school. He knows autos really well. Gordon Johnson, who I also hope won't talk about Tesla. Robert Mullen, Marathon Resource Advisors. Enrique Abeda, Paradigm Press. Edwin Dorsey, Bear Cave. We had him in a week or two ago. Tom Chanos, Jim Chanos' brother, runs a boutique short only research firm. Another guy you got to pay 20, 30,000 bucks to get his ideas. Tom Thornton is going to pick stocks. He's not going to blah 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 about the market. Steve Kress from Seeking Alpha, they've got incredible performance as well. Calvin,
yep,
funnily enough, Calvin Froge, shipping stocks, also does resource. I don't know exactly what he's going to pick. Zachary Marks, who you guys don't know, but a really good smaller hedge fund guy. Jacob Doft, multi-billion-dollar founder of Highline Capital, smaller fund now. And then Alberto Alvarez, AEG Research. So you've got four independent speakers. You're going to come away with 20 to 25 ideas. All right. If that's not value, if
Now let
hold
me
on,
just hit you with this. 2 seconds.
yeah,
Ready?
yep.
Right? They're all giving their speech. You have 25 ideas. But in your head, you've got like three quick questions you want to ask, like double check on, right? Like get a clarification about like if you understood that right, if what your takeaway was correct, right? So like at the end of that, if kind of like the ideas that you've come away with from each speaker, if you have the ability to like sign up, like, yeah, I'd like to join that, like it's 10 people only or whatever. I'd like to join that breakout room with him after. I'd love to ask him, 2 questions about that. And now you're coming away with
So,
an ability to like, confirm, yeah, like I really, I heard
right.
what you said, and this
So,
stock do seem like, growers, and you get
right.
a question.
So Brandon, what I would say is a great idea. My questions about technology, perhaps as a solution, is second best. People can, I'm going to allow time for questions in each session. There will not be the ability. I don't think it's going to be audio questions. I don't think we're going to do that. But certainly there'll be the opportunity to ask questions by chat. So I hear what you're saying. Getting feedback is important. Whether we can do the full Monty and have breakout rooms, I don't know. But I understand where you're coming from. So there will be an ability to interact. I just don't know how complete it will be. That's all.
Maybe it's even
Um,
a sign up for the ability to have a 10-minute chat. And it's a private Zoom that comes like an invite after, if you were interested enough to join it. That way it could stay,
yeah.
sort of secure and private.
Yeah, Brandon. As I say, that the limitation would only be technology. That's all. Okay. And
Yeah,
also,
we'll chat in the back about it.
yeah. Okay. Fine. Perfect. All right. Who else has something to say or ask or whatever? Because otherwise, we'll go a few more minutes. But um, I don't know. Does anyone else want to weigh in on anything? I thought Jay. I mean, from where I sit, let's just talk about the market a little bit. And Brendan, you're up here. Nasik. I mean, we had David Keller in yesterday. I thought he gave a really good take on things. The market's done nothing wrong, but it's I think breath has been narrowing a little bit, and the leadership's been changing, and he thinks the market's going up for the next little while. Who knows if that's right or wrong? But there are some things to pay attention to, and so I don't know. Most of the people I talk to, they're just sort of like, it's not a time to be swinging the bat really hard and doing a lot of stuff. I mean, even Jay was kind of suggesting as such. So I'm not bearish. I'm not bullish. I'm sitting there with all my gold and gold stocks, and I'm not tempted to chase anything. I even will admit to having shorted a couple stocks recently. Tom Thornton says he thinks the next 5 or 10% is down. I think that's probably right, but what do I know? It's just my own 2 cents. Brendan or Gnostic, either of you have any strong convictions right now? Brendan, are you still there?
Yeah, I'm here. Honestly, if I'm truthful, my convictions I've had the last 6 months are hitting the point where I thought they'd get to by 26. So it's really tough to be like, this is what I'm strongly convicted in, because like even the names that I've, what I mean, been long for
Yep.
this year, it's like I I'll give an example, like as Magnite. I happen to know the founder, CEO of Magnite, an ad tech company from my childhood. Right, grew up with him.
Yep.
Grew up in my
Yep.
town. He had back in the day when I was in high school sold a company that basically became Google's entire ad business to Google for $400 million back in like 2011, called AdMeld. I knowing him, right? He was like almost an idol to me, like a mentor, etc. So like when he got back into the ad business 5 years ago, he started combining a couple different companies together. He's a deal maker. Rupert Murdoch, back in the day, kind of guy, been in the game forever, right? Disney, head of ad sales, VP of Fox, like, everything you can name. Same with Michael Barrett. He's the CEO of Magnite. He started combining a couple different ad tech companies back 5 years ago to build the supply side of connected TV advertisement, right? They control now 99.8% of the supply side of ads you see on like streaming platforms, right? So like as Netflix gets into live sports, they need live ads, right? That programmatic,
Right.
he built the programmatic dynamic two place marketplace for digital ads, and basically he's back at it again, trying to rebuild that again for connected TV, is what he's been after for 5 years. So Magnite is like an example of that. I've like, what I mean, knowing that and seeing that, I've owned it for a while. But like I was just saying, been convicted, but I didn't think it would hit $20, buying it at $9 until 2026, 2027,
Yeah.
and it's at $20. So now it's like, these are names you want to say I'm convicted in and I want to hold forever. But like could I be telling people to buy right now? It's really hard when you're
Yeah,
already
no,
at
yeah, no, you got paid big time, Reese. I get it.
it,
So,
in most
yeah,
names. I feel like most people should like
yep,
kind of feel that way, and like the names that they
yep,
were like
yep,
long and convicted in. So to say by now, I don't know. If pullbacks happen, yes. I'm more so in the area of taking some profits, you know what I mean, and scaling like just as a reduction of risk and allowing that to, you know what I mean, like settle off. I don't think necessarily that means a pullback, but I think it's hard when you've reached the goal, the number you thought you would hit, on a market cap, let's say basis by 2026,
sure.
and it's mid 2025. It's very hard to double down on that mid 2025, expecting even more, multiple expansion.
Yeah, no, that makes a lot of sense. That makes a lot of sense. So, yeah, I mean, it would probably be the most frustrating for people. What if the market just the next, I'm just spitballing with you, Brendan. But what would what if the market just the next, couple months or whatever kind of doesn't do a whole lot of anything. It just goes sideways, up down, meandering along, right? So neither bulls nor bears get satisfied. When a market makes a local high, everyone's getting all bulled up. Oh, you got to pile in, and then when it sells off, oh my God, the world's coming to an end, and just we get a correction time rather than price. I mean, that'd be again, the whole idea of the role of Mr. Markets to embarrass. It's a Walter Deemer quote: "Embarrass as many people as possible all the time." And so maybe just drive people crazy, just up, down, up, down, up, down. Because think about it, Brendan. Think of where we are overall. The market's really not up very much this year. Certain stocks are up, but most people didn't have the big down on their bingo card when the year started. And then when we got in the hole in March, April, people didn't have it on their bingo card. They're going straight back up again. So, we're kind of back to where we started the year at in a lot of so but it's a market of stocks. Some stocks have done really well, some stocks haven't done so well. So I don't know. I mean, any thoughts about any of that?
I think it's a dispersion trader's dream so far, right? Like
Yeah.
if you're running a dispersion book and in any which way, this is what you've been waiting for. You've probably crushed it so far this year, and you're going to continue to going through the rest of the year, especially if that chop happens and that there are names that just
Yep.
superbly outperform, right? Short the basket, long a few in the name in the sector, and you could easily have wild outperformance. But I agree with you, and I actually think like I spoke to people about this week. If you were to look at the beginning of the year, right, and you said like what number would you see S&P at? You had targets everywhere like 6550, right? Were some targets, right? And then I'm pretty sure around there, right? 6500 people had coming, you know what I mean, when we were around 6000.
Yep. Yep.
Um
Yep.
if you're at 6100 right now in June, right? I don't think it's crazy to think you could touch 6,500 this year, right? But I don't think anyone
Well,
should be expecting the fact that if you hit 6,500, it means that's what we're ending the year at. You could be hit
yeah. No.
65 and you could be at 59
Yeah.
and then at 62,
Yeah.
right? And
Yeah. No. Completely. And it's funny. I remember earlier this year. Everyone comes out with their index forecast, which is kind of like a fool's errand. But in the for what it's worth category, last year,
nobody was
last
within
year.
20%.
Yeah, okay. Everyone's looking for. I'm not throwing stones because I get it as wrong as most of the people, if not more often. But I'm just observing the crowd. I think, consensus for the street was unchanged, and the market was up like 26% or something like that. Okay, we came into this year, Brendan. I think the consensus forecast, was even higher. It might be closer to 7,000. Doesn't matter. Let's not quibble over a few percent. The point is, people were looking for a considerable up. And what happens as soon as we come out of the gate, in January, like down we go, right? So, that's just what the market does to people. And so, again, it's a market of stocks I can find, and I'm sure you can too. I mean, you can find, I don't know how much of a technician you are or whatever, but you can find some pretty good looking charts out there, right? Conversely, you can find some stuff which looks like it's just, oh, it's
Like
went
Pepsi.
straight up. The valuation made no sense, starting to roll over, and maybe it went up just because of flows or some macro driver or whatever. And I don't want to talk about electric car companies. That would not be appropriate, but you know what I'm talking about. I mean, I was looking at the stupid video I posted today. I went into Wingstock. I have no position in Wingstock. Okay. Kudos to anyone who's been long Wingstock. All right. So I was trying to be a wise guy, and I put one of these DJing, video walk and talk things on. The first one I ever did one. And I go in there and I'm like, 90 PE? I don't think Nvidia sells at 90 times earnings. 15 times sales? What is this AI software play? This is for like low priced chicken wings. I'm like, and then I know the chart looks good. I know number go up. I know there's a big short interest. I don't have to have a position, but I'm looking at that and I'm like, who in their right mind would buy that right
Like
here,
sweet
right
dream.
now?
It's like we're a tech company because we make salads using some tech. It's like, oh, oh really? Are you?
Oh God! All right, hey
Hilarious.
Brendan, listen, we can keep going. We can keep going, but we got to close this, right? And by the way, I'll DM you, reach out to you. We need to catch up next week or two. All right.
Absolutely.
So hey Brendan, thanks for everything. Jan, Gnostic, Jay, you're not here anymore, and whoever else I forgot. This has been great. Appreciate all of you. I'm trying to remember. I think our next space is on Monday, if I'm not mistaken, with Alberto Alvarez. He's going to talk about mining stocks. So, and he is also going to be at our conference. So, it's Monday at 5 p.m. It's in my feed. Alberto Alvarez on mining stocks. All right. Good night, everyone. Thanks. Take care. Be safe. Bye-bye.
Have a nice one.
Bye.